Hi everyone. Today, under the series of basic accounting terminologies, we will try to understand the terminology business transaction. So, what is business transaction? It is an economic activity which changes the position of the financials. So, whenever a business transaction takes place, it changes any of the financials like assets, liabilities, or your capital account. So that's the business transaction. Now, what are the key characteristics of business transaction? First of all, there is an exchange of goods or services for a monetary value. So if there is no monetary value involved, it is not a business transaction. So let's say you're buying goods for your raw material for the organization, let's say for $100K, it's a business transaction. Second characteristic, it has a dual aspect. So it has two aspects to it. One would be debited, the other would be credited with the equal amount. So when you purchased an asset, purchased goods and services, let's say, so you're going to debit purchases and credit cash with the equal amount of $100K. So that's a dual aspect. It is an economic activity. The third very important point is there's an economic activity involved. So, for example, you're purchasing goods and services for cash or credit, or you are paying salaries to your employees, or you are paying loan on the capital. So in every transaction there is an economic activity involved and there is a monetary value also involved. But if you are buying gift for your friends, if there is a social activity, social engagement you are doing, and you are buying gift for your friend, it will not be considered as a business transaction because it is not for the business purposes. Fourth feature is there could be an external business transaction or internal business transaction. So how you distinguish between both of them? In external business transaction, the economic activity will take place between two independent business entities. So let's say you are buying goods and services from any vendor. So there is economic activity which is the vendor organization and your organization. So there are two separate entities involved. So it's an external transaction. But there could be a business activity which is internal. Within the organization, it is happening within the same business entity. So let's say you have purchased fixed assets. You have fixed assets. Now there is a depreciation involved on the fixed assets. So that depreciation is a business transaction, but it is internal business transaction. Fifth point, it is changing the financial position of the organization. Whenever any business transaction takes place, it changes the financial position. How? When you're buying goods and services or you're buying any asset, your asset account is impacted. Or when you are investing somewhere, your investment account is impacted. So there's an impact on the financials. Now last feature but not the least is money involved. Like I mentioned above in the first point, there is a monetary value involved. So each business transaction will have a monetary value involved to account for in the books of account. Now let's say there is a very experienced manager is retiring from the organization. There is a huge impact on the organization, but you cannot measure that in terms of money. So it will not be a business transaction. So I hope you will like this video. Do like and subscribe for more information on the basic terminologies of accounting. Thank you very much.